Hello and welcome to Market Pulse, your trusted source for clear, concise, and actionable market insights. Today is Wednesday, November 5th, 2025. In this update, we will unpack the latest market movements, dive into sector performance with a special focus on technology, and look ahead to key economic indicators set to be released later this week. Whether you are a seasoned investor or just starting out, we will help you understand what is driving the markets today and what to watch for going forward. Let us get started. To begin, let us take a snapshot of how the major indices performed today. The U.S. equity markets closed lower across the board, with the S&P 500 falling 1.17% to 6,771.55. The Dow Jones Industrial Average was down 0.53%, settling at 47,085.24, while the tech-heavy NASDAQ saw the steepest decline, dropping 2.04% to 23,348.64. Across the pond, the UK FTSE 100 eked out only a slight loss of 0.12%, closing at 9,703.82, reflecting a more muted response to global market pressures. What is driving these moves? The market is showing mixed performance today, with investors digesting a blend of cautious corporate earnings, geopolitical developments, and anticipation of upcoming economic data. The sharper drop in the NASDAQ today signals some profit-taking in tech stocks, despite pockets of strength within the sector. Turning to the technology sector, the story is nuanced but ultimately encouraging. Despite the broader market declines, tech stocks are showing pockets of resilience and even modest gains in certain subsectors. This divergence is important because it suggests investors are rotating within tech, favoring companies with strong earnings momentum, innovative product pipelines, and robust balance sheets. Recent quarterly earnings from several large-cap tech firms have exceeded expectations, supporting selective buying. Meanwhile, artificial intelligence, cloud computing, and semiconductor stocks continue to capture investor interest amid ongoing digital transformation trends. However, the sector is not immune to profit-taking or broader market skepticism. The NASDAQ 2.04% decline today reflects some short-term caution, possibly due to valuation concerns and uncertainty around interest rate policy. For retail investors, this means there may be opportunities to focus on high-quality tech companies with strong fundamentals and growth drivers, while remaining mindful of the sector volatility. Looking ahead, the economic calendar is packed with important data releases that could influence market direction into the end of the week. Among the most anticipated are the U.S. Nonfarm Payrolls report, ISM Manufacturing Index, and consumer confidence data. These reports will provide critical insight into the health of the economy, labor market dynamics, and inflationary pressures. Investors will be watching closely for any signs that inflation is easing, which could influence the Federal Reserve interest rate strategy. Conversely, persistent inflation or weaker-than-expected job growth could reinforce a cautious market stance. In the UK, inflation and GDP data are also due soon, which may explain the FTSE relative stability as investors brace for domestic economic updates. While we do not have specific stock highlights today, it is useful to review some general principles around stock analysis in the current environment. With markets showing mixed signals, look for companies with strong earnings visibility and guidance, healthy balance sheets and cash flow, competitive advantages in their sectors, and resilience to interest rate fluctuations. For tech stocks, pay particular attention to those leading innovation in AI, cloud infrastructure, cybersecurity, and semiconductor manufacturing. These areas have long-term growth potential despite short-term market swings. Volume trends can also provide clues. Rising volume on price advances often signals institutional support, while high volume on declines may indicate selling pressure. Remember, diversification remains key. Balancing growth stocks with defensive sectors can help mitigate risks in volatile markets. To wrap up, today Market Pulse reflects a complex landscape. Major indices closed lower, with the tech-heavy NASDAQ leading declines. The technology sector shows pockets of strength amid broader caution. Key economic data releases later this week are likely to shape market momentum. Investors should focus on fundamentals, sector trends, and upcoming economic signals when making decisions. As always, staying informed and disciplined is critical in navigating these markets. We will continue monitoring developments and bringing you timely updates to help you invest confidently. Thank you for joining us on Market Pulse. If you found this update helpful, please like, subscribe, and hit the notification bell so you never miss our latest insights. Stay smart, stay invested, and have a great day.